weekend all. Ira Epstein of Linn Associates with your financial market wrap-up, your weekend edition, and this is for Friday, July 10th, 2020. Well, look behind me. Stock market. Would you know that there's a surge in COVID where the hospitals are bursting at the seams? They're already closing down more areas in Chicago. Now the bars, instead of going to their 4 a.m. licenses, midnight starting tonight for the weekends, might be earlier during the week, and they're starting to restrict more and more events. Now, that's around the country. You wouldn't know that. What the market's banking on is that it hears that maybe there'll be a breakthrough for COVID, maybe there'll be a treatment, maybe. None have come through yet, but they are finding disinfectants, tongue-tied there, and that you can put down. They've been approved, they're getting approved by the FDA, and what that will mean is that they're at least making headway and we can get our surfaces cleaner and cleaner at a cost that makes some sense. That's good news. We saw the gold market today back off a little bit. The dollar still, in my opinion, in a bear trend, trying to establish uptrends as I see it in the euro. The energies are still looking okay, believe it or not. And there was a report today that came out, and we were looking from and this is one of the Federal Reserve reports, and it was looking at an area and saying that the producers really need to be closer to $50 a barrel and $2.88 in natural gas to put wells back out. That's $1 away here, a cubic foot, and that's what, from our oil, that's another $11. I don't know that that's true. The EIA report, the Baker Hughes report at the end of the day said that we've lost more wells. 1 well was lost in natural gas, 4 more lost in the oil sector. So we keep getting less rigs out there that are doing anything. When we take a look at this chart right now, and remember, this is our weekly edition. We'll look at one chart of a month, and then we'll look at everything else on a weekly basis. This was December 31st, 32.31. On a closing basis, you came all the way down. You do realize right now, at least if you don't, let me explain it. You're well within striking distance of going higher on a monthly basis, all right? This is only the 10th of July. We might be able to close over that. Wouldn't that be something? On the S&P on a weekly chart, this was an important weekly close. And the reason is we got back over right through here. And the fact that you're able to get back over that close, and that was 31.61 and a quarter, signals that, yeah, you might turn around here, but you've ended the pattern of lower highs, lower lows. You've got the lower low, but a higher high. You've gone back to neutral. The bias stays up because the market's over the 18-week average of closes. In the chart action, the market, as you can see on a weekly bar chart, it's been spinning around between these two big reversals in the market, and now the market's, I think, answered its question on a weekly basis. It went back to a bull pattern. You've got the higher lows, higher highs. So the question was answered, and we got into a small pattern of a lower high and higher lows, and now you've broken out again. Until you take out 29.83 and a half, that pattern stays bullish. You're over the 100-day average, but the 18 is under it. A bullish crossover would take place if we can get this number, the 18-week over the 100. Let me tell you what happens with that. Then you have the shorter term average over the medium term 100, and that's over the 200. Moving average traders will go bananas. They'll say this is the beginning, we're going for new all-time highs. Just expect it. As a chartist, I would say right with them that. When we take a look at Bollinger Bands, they're far away. Are they in play? Possibly, but to get to them, you have to make a new high for the move. Whoa, that would be an interesting one. We'll see if that's going to happen here. Momentum, locked in bullish. Remember, on the slow stochastics, you don't use it on the longer term charts, at least I don't, the way that you do on the dailies. I find that they're either pointing up, down, or sideways. I found that to be a better way to look at them. I don't believe they get overbought or oversold. That's what I'm basically saying. When you take a look at the NASDAQ, is there any question where the power of this market is? Practically anything with FANG is gone. Amazon, I can go on and on. Tesla. I don't know how Tesla doesn't get put into more indices. I mean, it's a stock that is just on a run here and it doesn't stop. Amazon the same. I mean, these are the future stocks. I'm not saying it's necessarily cars. You can argue that Tesla is an internet company. When you take a look at the Dow Jones, well, this week's high at 26,280 still hasn't taken out 26,294, but you do have higher lows and lower highs. Won't take much to get the market by getting over 26,294 on the weekly chart to say back into the bull state. You had a correction in the market to the downside on the daily charts. I know I had my traders playing that about 2 weeks ago, and it was neat and it worked out. Not all trades work out. I'm always going to balance that for you. That one happened too. And now the question, if you get over this, how can you be anything but bullish until you get back under the previous week's 24,743? When I look at the Russell, back to the bull move, okay? Higher lows, higher high with this week, momentum up, okay, or sideways, certainly not pointing down. I guess I'd argue sideways. I'm looking for resistance. If the rally can continue at 15.30, what would put it into question is taking out 1359.60. So far, pretty bullish on all the long-term charts on stock indices. Now, I want to bring you back in time just a little bit here. We have been going sideways in a pipe, as I call it. When you take the Bollinger Band and you narrow it in the way that you see, and that's the black dashed lines, I refer to that as a pipe. And when you're in that pipe, prices churn. When they churn, they try to eventually burst out one way or the other, and they often fail. Watch. You made your move, got up to the upper Bollinger Band, and now you pulled back in the market, back under it. So you're trying to push it up, but momentum's now turning down. You're failing there. Don't be surprised if you get a bit of a correction. I'd love to see it break out of this, because then I could say here's a base, and you're probably going to go to zero. You're laughing. Don't laugh. You can go to zero in some of these markets, such as the 10-year note. Why not? You know what the yield is? 0.6. How hard is it to get to zero? Wow. Higher lows, higher highs, forming the pipe. I still look for the market good. Momentum is flat in the market. Dollar index. The dollar index was in a correction. We were coming up just like this, and I had told you expect a bounce, but I don't think the dollar was going to go very far on it. Now the dollar has gotten under the previous low. The next rally in the market, my guess is the pros are going to sell it. They hope to get a pattern maybe where they get lower highs, lower lows, and get this market down. Momentum pointing down, bias down. What stopped the market, if you look at it, the 100-week average was really the game, and it was no more than a bounce off the first challenge of the Bollinger Band, not changing the overall trend in the market. Eurocurrency is the mirror image the other way. Bullish, fell back to the 100-week average, and now it's pointing back up. Next target, if it can get up further, 114.17 is a possibility here. So that from here, another full cent in the market. Canadian dollar, correction mode, not a bearish mode on the weekly chart. You've got the lower highs, lower lows, but something important could have happened this week, and it didn't. Let me show you. This is an outside week down. If you take out the high of an outside week down in the next two sessions, remember this is a weekly chart, so it didn't happen there, and it missed it this week. That's all. If it did, I would have said you're going to the upper Bollinger Band. I don't know what you're going to do right here. If you break under 72.97.5, maybe you make a further run to the 18-day average. I don't see anything worth shorting, and there's certainly at this point nothing on the longer-term chart that's bullish. Japanese yen reestablished its bull trend. It fought a battle at the 18-week average of closes in red, you see that, and with the pattern, you're now higher low, higher high. What would break it is getting back under 92.53.5. The number that the trade seems to be liking to support is the 18-week average. If the market can mount a surge, then possibly wherever that upper Bollinger Band comes in could be the next resistance. Bitcoin. Notice that it's staying over the 18-week average. It's staying well under on the weekly charts also, the Bollinger Bands, and they haven't begun to compress. Interesting that they haven't done that. Momentum drifting to the downside, which sort of goes with prices just hanging here. I don't see anything that's a buy. Why? You've got lower highs and higher lows. That's not a trend. If you broke through here, the 89.50 level, you might be headed back to 83.17, but it wouldn't be bearish. Why? Because you're still over the 18-week average, so the bias stays up. In the Brent versus the WTI crude, we are flat. Look at how long we've been flat here at the 260 some odd level, just hanging in there. The longer term charts remain bullish. They have higher lows, higher highs. Interesting, today Libya announced that they are coming back online with oil. What did the market do? It didn't give a darn. What the market focused on, which was fascinating, when I told you that the Federal Reserve had done a study and said what the prices of oil were needed to get people going. They're talking you need $51 in crude and $288, I think was the number. And this is what their survey says, in natural gas to get wells really getting a lot more wells on. They also looked at the market, and we have a 7.9 million barrel a day reduction. And they look at that as favorable, that the U.S. production is down and it's kicking prices higher. So they're not paying attention to the news that could be bearish, they're paying attention to the news that is bullish. That's often what bull markets do. When we look at the WTI, remember we went negative. It seems so long ago, but it was right here in May. Can you believe that? The differential, $80 a barrel. Craziness, right? But you're into the uptrend. Higher lows, higher highs until you take out $37.50. Rebob gasoline. On this chart, it's still bullish. You've got the higher lows, higher highs. You'd have to take out 110.91 to negate that. That would not turn the chart bearish, but it would stop the bull trend. Momentum's still pointing up. I say the bulls are still trying to drive this market to the upper Bollinger Band. So you put it all together and you try to come up with game plans, and that's what I do with you. Each morning at 5:40 in the morning, a.m., Central Time, I sit down, and by that time I've already read what's going on in Asia, Europe. I've written the major reports of the day. If there's news that broke in those markets with economic data, I give you a whole highlight. It takes you a moment to see everything that I've got. Then I start reviewing 40 charts, and they look like this. They are different looking than these because I have more studies on them. And I like the black background because it really works well when I either hold webinars, which I told you I'm going to be doing those. If I had air conditioning in the house, which they still didn't fix, I would be doing them already. I'm just not going to sit down here with that. So as you look at all this, these are how I cover the markets, all these different sectors. There's a scroll bar on the bottom that when you look at it, you can just move. So let's assume you wanted metals. Just scroll to it. You don't have to see everything else. That's your call. How do you find out about this? In our combo package, where I also do the ETFs, or you can buy this on a yearly basis. Go to our website. Under the word research, everything is explained. Hope you take advantage of it. I'm Ira Epstein. Interesting markets. Take care.